Welcome back to the Daily Crypto Roundup, your trusted stop for what really moved the markets today. If you're new here, make sure you hit follow and drop a 5-star rating. It takes you 2 seconds, but it helps this independent show reach the people who actually care about signal, not hype. Today we've got a packed lineup. Falcon X making a shock acquisition to muscle into the ETF world. Kraken's earnings exploding as volumes roar back. Zcash pulling an unexpected 460% surge while Bitcoin steadies. Amazon Web Services causing chaos with a major outage that froze part of the crypto stack. New adoption data showing who's really leading the global race. The strange decoupling between Bitcoin and gold that's got analysts rethinking the digital gold label. A wave of corporate treasuries quietly stacking crypto, and a looming US government shutdown that could freeze regulation right when markets need clarity most. Before we dive in, let's check where the numbers stand right now. Bitcoin is trading at approximately $107,950. Ethereum is currently near $3,808. BNB trades around $1,074.89. XRP sits at about $2.39. Solana is priced near $182.89. Tron is changing hands around 32 cents. Dogecoin is at roughly 19 cents. Cardano is near 63 cents, and Chainlink is around $17.98. The total crypto market cap stands at around $3.74 trillion, with Bitcoin dominance at 57%. Now, straight into the headlines. Falcon X shocked the industry this morning by confirming it will acquire 21 shares, the Swiss ETF issuer behind several of the most successful spot crypto products in Europe and the US. Regulators only recently opened the floodgates for tokenized ETF products, and Falcon X clearly wants a front-row seat. Reuters reports that the deal was signed late last night and will close before year-end, pending FINMA and SEC approvals. For context, Falcon X already runs one of the largest institutional liquidity desks in crypto, so absorbing 21 shares essentially turns it into a hybrid between an exchange, a broker, and an ETF powerhouse. Analysts at Bernstein called it a transformational move that cements crypto's institutional on-ramp. They point out that 21 shares has been responsible for roughly 38% of global crypto ETF flows since April, and Falcon X has the infrastructure to push those products to Wall Street clients hungry for regulated exposure. This could reshape how traditional funds touch digital assets in 2026. Meanwhile, Kraken delivered numbers that blew past expectations. Revenue for Q3 came in at $648 million, up 114% year-on-year, with adjusted earnings around $178.6 million. That's not just a bounce. That's a comeback. Bloomberg notes that spot and derivatives volumes nearly doubled compared to Q2, driven by Bitcoin ETF inflows and resurgent US retail trading. For a business that was in regulatory headwinds a year ago, the tone on their earnings call was defiant. Kraken CEO Dave Ripley said, "We're past the winter. The next cycle will be built on infrastructure and compliance." Wall Street heard that loud and clear. Then there's the surprise story everyone is talking about, Zcash. Out of nowhere, the privacy coin favorite has rallied over 450% in a month. Traders can't decide whether this is a short squeeze or the beginning of a broader privacy token revival. CoinDesk reports that Zcash's volume has hit its highest since 2018, with on-chain addresses active for more than 30 days, jumping by 240%. The trigger? Speculation that the US Treasury might ease future rules around privacy layers after industry lobbying for balanced AML standards. Analyst Noel Acheson called it a sentiment snapback trade, the market testing what's still viable beyond regulation. But the day wasn't without chaos. An Amazon Web Services outage rippled through the crypto ecosystem earlier, freezing infrastructure for exchanges and DeFi platforms that still depend on AWS clusters for their backend. Several apps, including certain Solana RPC nodes and a major Ethereum indexer, went down for roughly 2 hours. CoinDesk called it a sobering reminder that decentralization is still running on centralized servers. Price action was muted, but social media lit up with memes and frustration. Developers are now calling for more distributed cloud alternatives to reduce single-point risk before mainstream adoption accelerates. Globally, TRM Labs released its latest crypto adoption index this morning. ranking India and the United States as the top two nations for crypto usage between January and July 2025. That might surprise some listeners given India's tight tax regime. But the report notes that domestic exchange apps there saw a 58% spike in downloads this summer. In the US, adoption was driven by younger retail investors moving from meme stocks to crypto ETFs. TRM Labs co-founder Ari Redboard told the block, "This is no longer a fringe market. It's a generational transition of capital behavior." The report also flags Latin America as a fast-rising region, with Brazil and Argentina closing in on Vietnam for peer-to-peer transaction growth. Switching gears, analysts at Crypto Slate noticed something unusual this week. Bitcoin and gold have fallen to near-zero correlation for the first time in over a year. That's right, the whole digital gold narrative is being tested. Historically, when macro fear rose, BTC and gold moved together. But since October 1st, gold is up 5% while Bitcoin is roughly flat. Traders interpret this as the market redefining Bitcoin as a growth asset again, not a hedge. Goldman Sachs strategist Zach Pandal said today, "It shows Bitcoin's investor base has matured. It's now a leveraged play on liquidity expectations rather than a fear trade." That subtle shift matters for how institutional funds model crypto exposure heading into 2026. Corporate adoption of crypto is the quiet revolution nobody's really talking about. Over 200 public companies have now disclosed plans to hold digital assets on their balance sheets, reclassifying themselves as digital asset treasury companies. The shift isn't just from tech firms or fintech startups either. It's creeping into industries like manufacturing, media, and even energy. The common thread is diversification. They're looking to hedge against inflation and currency devaluation by holding Bitcoin, Ethereum, and increasingly tokenized treasury products. ABC News ran a feature this morning tracing how many of these companies originally pivoted into crypto during market downturns. Analysts at JP Morgan say that these positions could act as catalysts for the next mainstream wave, because the more corporate treasuries accumulate, the more stable the demand base becomes. If you remember how corporate gold holdings changed the market in the 1970s, this feels eerily similar. Only now it's faster, global, and transparent on-chain. Still, the real wildcard is policy. The ongoing US government shutdown saga is beginning to spill into crypto. As it drags into its second month, key agencies like the SEC and CFTC are operating on skeleton staff. Policy meetings are being postponed, ETF reviews are backlogged, and enforcement actions are slowing. CoinDesk described it as a regulatory vacuum at the worst possible time. That uncertainty creates a strange paradox. Risk goes up, but volatility hasn't. Traders appear to be taking the view that a lack of government interference actually benefits the market short term. But longer term, analysts warn this could delay key rulings on token classifications and spot ETF approvals. Former SEC lawyer John Reed Stark commented earlier today, "Markets hate indecision. Every day this drags on, it stalls clarity and therefore capital. The ripple effect is global. European and Asian regulators are monitoring Washington's gridlock closely because US guidance still sets the tone for global compliance." The irony, as some have noted, is that while Congress argues over funding, crypto markets are doing exactly what they were designed to do: continue running 24/7, regardless of political noise. Despite all this chaos, sentiment across crypto remains cautiously optimistic. Bitcoin's daily volume has stabilized, Ethereum's gas fees have normalized, and altcoin activity is showing early signs of rotation. Traders are treating dips as opportunities rather than panic signals. Derivatives data shows a 12% rise in long positions across major exchanges, suggesting confidence is quietly returning. Analysts have also been dissecting the Kraken and Falcon X stories as signals of a maturing market. They argue that consolidation, institutional involvement, and ETF expansion are the markers of a post-speculative phase. As Galaxy Research put it this morning, we've moved from narrative trading to infrastructure trading. The focus is no longer on what might exist, it's on what's already being built. Zcash's rally still divides opinion, though. Some believe it's purely speculative. Others think it represents the beginning of a new theme: the revival of privacy. Privacy isn't just a feature anymore, It's becoming a political statement. In an environment where KYC frameworks dominate, a functioning privacy layer reminds the market what decentralization really means. Meanwhile, the AWS outage earlier today has triggered broader debate around dependency. For all the talk about decentralized computing, much of crypto still leans heavily on Amazon, Google Cloud, and a handful of major providers. Developers say this incident should be a wake-up call. One engineer posted, "We're building decentralized finance on centralized servers. It's a contradiction. Expect renewed interest in decentralized infrastructure projects like Akash Network and Flux over the coming weeks as a result." Turning back to the macro lens, the decoupling between Bitcoin and gold is being watched carefully by institutional strategists. If Bitcoin continues to behave as a liquidity-sensitive risk asset rather than a store of value, it could attract an entirely different investor base. Fund managers who avoided crypto due to its digital gold narrative may now view it as a growth proxy, something akin to tech exposure rather than insurance. That shift could help explain why equities and crypto have occasionally moved in tandem this month. When risk sentiment improves, both rise. When fear sets in, both fall. It's a different dynamic from the one we saw in 2020 to 2022, and it's reshaping portfolio strategy models. Morgan Stanley's digital asset desk even noted that Bitcoin's correlation with the Nasdaq is now higher than with gold for the first time since mid-2023. In developing markets, the TRM Labs report is spurring conversation about on-the-ground adoption. India's ascent to the top of the list surprised some observers, but it fits a pattern. High smartphone penetration, young demographics, and growing mistrust of traditional banking systems. In the US, the growth story is more ETF-driven, as easier access pulls in older investors. Interestingly, Latin America's surge is being powered by stablecoins, not speculation. Argentina and Brazil have seen local merchants begin accepting USD-pegged tokens directly, bypassing currency volatility. These are quiet revolutions, the kind that don't make flashy headlines but reshape financial behavior permanently. Now, looking forward, analysts are largely split on whether the current market rally will hold. Some say we're entering a mini-bull phase ahead of the next Bitcoin halving. Others believe this is a relief rally driven by ETF optimism and lower treasury yields. A few technical analysts see consolidation between 105,000 and 115,000 as healthy, before any bigger breakout. VanEck's Matthew Siegel summed it up earlier today. "We're no longer in a hype phase, we're in the architecture phase. The builders are winning again." That theme keeps surfacing: infrastructure, stability, and professionalism. It's a far cry from the meme coin mania of 2021, and that's a good thing for anyone thinking long-term. Before we wrap, let's step back and connect the dots. Falcon X, buying 21 shares, Kraken's record quarter, and the wave of corporate treasuries entering crypto all point in the same direction: integration. This market is merging with the traditional financial system piece by piece. AWS's outage reminded us that reliability still matters. TRM's adoption data showed that participation is now global, not niche. And the decoupling from gold showed us that crypto isn't trying to be something old. It's becoming something new. And while Washington wrestles with its shutdown, the rest of the world keeps building, trading, and innovating at full speed. It's almost poetic. Decentralization proving its point in real time. So as we get closer to the weekend, the message is simple. Stay informed, stay skeptical, and stay self-custodied. Markets will keep swinging. Headlines will keep shifting, but your security shouldn't. Protect your crypto with a hardware wallet. We use Ledger, but take control of your keys before the next wave of volatility hits. You can grab one directly through the affiliate link in the description. If you've enjoyed today's breakdown, follow the show, drop that 5-star rating, and share it with someone who still thinks crypto is dead. Because if you've been paying attention this week, it's anything but. This has been your Daily Crypto Roundup. We'll be back tomorrow. And as always, we'll see you at the top.